You got to be flipping the flapjacks right on the floor. Dow Jones Industrial Average down over 4,000 points from the highs. It hit not that long ago, now down over 8% now at this point in time. We're looking at Coinbase stock here, down 51% from its highs. MicroStrategy down 70% from its highs. SoFi down about 47% from its highs. The Hood, back to the Hood, down 50% from its highs. Little Dingo is down 81% from its highs. That is Duolingo. HIMS is down 64% from its highs. Tesla's only down 20% from its highs. Looking at Palantir stock here, Palantir is down 26% from its highs. Meta Platforms, the beast. Even big techs have been getting hit. This stock is down 22% from its highs. Oracle stock down 53% from its all-time high. Amazon stock down 17% from its highs. Nvidia, the most amazing numbers in the world. What an incredible company. And yet stock's down 13% from its highs. Shopify's down 31% from its highs. One of the most underrated great companies in the world is Shopify. AMD, look, they're going to have just unbelievable growth rates moving forward, but that stock still troubled, down 25% from its highs. Adobe down 60% from its highs. Salesforce down 47% from its highs. Here we are, folks, once again in a moment in the stock market where they're saying, don't buy stocks. Don't buy stocks in 2026, right? This time is different. We got a lot of scariness out there, right? And I have some opinions on this subject. 3 core subjects we're going to get into in this video here today. First one up here is I'm going to make a very strong case why you need to be buying stocks heavy in 2026. I'm also going to share some shocking information in this video about what I'm doing with my money moving forward in terms of the stock market. That's going to be, I think, pretty eye-opening for a lot of individuals and kind of understanding what I'm up to, why I'm doing it, okay? From there, second subject we're going to get into here today is I'm going to address the top comment I had on yesterday's video. I think it's very important. Third subject up here, Micron. That stock is moving down and their earnings were shockingly great. Unbelievable earnings, okay? Why? What's going on? There's an opportunity, those sorts of things, okay? I appreciate you for joining me for today's video. There's one thing and there's one thing only I need from you guys here today. If you could make my day, I would be very happy. Just smash the like button. Just hit that like button. Smash it. Hit it lightly. Hit it like a fairy. Do whatever you got to do to make it glow. Thank you very much. Additionally, make sure you're subscribed here to the channel. You can see more of my videos in the future. If you're subscribed, we are now at over 920,000 subscribers. If you haven't subscribed, what the heck are you doing? Join us, okay? Alrighty, ladies and gentlemen, listen. I wanted to start today's video looking at interest rates and thinking about things like, what if you were to buy a home right now? What if you're going to take on credit card debt? What about a used car? Those sorts of things, okay? The 30-year mortgage rate right now is 6.36%. Credit card interest rates are pretty close to 20% right now. The average interest on a used car loan right now is right around 11%. Average. Brutal, right? Right now, it does not make sense to buy a new home, a new car, to take out a bunch of credit card debt, any of that stuff. And I mean, credit card debt basically never makes sense to do that. That's craziness, right? You can use credit cards to get points as long as you pay it off right away, but never pay interest on a credit card. That's insanity, right? Right now, it makes sense to put money into stocks in the short term, not to go buy a new car unless you absolutely have to, right? If you absolutely need to buy a house right now, you can go buy a house, right? But at the end of the day, it makes the most sense short term, meaning likely the remainder of this year, so let's say the next 9 months, to be putting money into stocks and not go buy a new $40,000, $50,000 used car, right? Like, it's just not a good time to be doing something like that. If we look at me and my purchases I've made over the last few years that are kind of big ticket things, I've moved away from taking out loans really on like cars. Cars, I used to always take out loans. I would never buy, the only car I ever bought cash was like my second car ever. It was a Hyundai Elantra. I bought it for $3,300 from somebody. Other than that, I've always been the type to get a car loan, because you know why? I'm thinking about it in terms of the rate a return I can get in the stock market versus what I would take out car loans for. Like car loans, I would get them at 2, 3, 4%. Very low numbers. I've moved away from taking out car loans. The Ferrari I bought, back at the end of 2024, cash. The Model X I bought, cash. That one was the end of last year in 2025. And even my new house I'm buying, right? That I put 30% down for. All the projects that are going on in that house, all buying everything cash. There's no like loans on like the backyard projects or anything like that. All the furniture, which is going to be insanely expensive, all cash, not taking out loans for any of that. I've really started to move away from like taking out loans on things. And I think we all need to start doing that until, let's just be honest, interest rates are a lot lower than where they're at right now. You do not want to sign your name. I mean, if the average is that, some people are going to have to sign at 14, 15% rates, maybe 16 or 17% rates on a used car loan. Come on, man. We can't be doing that stuff. So right now it makes the most sense possible to be putting your money into stocks. Now, if we can continue to get more weakness in the real estate market, right, and mortgage rates come down simultaneously, eventually, it can make sense for a lot of people to buy homes. But right now, I think the only homes that are really make sense to buy for the most part, from what I'm seeing, is really the high end of the market. High end of the market's pretty weak right now, but the high end of the market, a lot of people can come buy those homes cash. So do keep that in mind. Look at this here. This is a fear and greed index. We're now in extreme fear for the stock market. This is certainly not the craziest reading I've ever seen, but we are in extreme fear for the market. The previous close, we were also in extreme fear, so we're now even more in extreme fear, right? A week ago, we were also in extreme fear, but not nearly. So basically, we have a trend of the fear and greed index, which kind of takes like 7 very important factors into account to kind of give you this reading here. We're moving further and further into extreme fear is basically the moral of the story. If you look at a month ago, we were in fear for the stock market. It was at a 41. So basically we have this trend of the market moving more and more further into extreme fear. That's always a great time to buy. I've never seen it where you've had a trend where you moved further and further into extreme fear and it wasn't a great buying opportunity. To catch the absolute low, difficult. But the moral of the story is, ladies and gentlemen, listen, you need to be buying stocks right now. You need to be buying stocks, and you need to not stop buying stocks. You need to be buying stocks next week, next month, the month after. This is like an aggressive kind of time to be buying, right? Now, look at AI investor sentiment. We have a clear trend toward bearishness, right? So the historical average is 31% of investors that do this survey. And basically the survey is, are you bullish on the market the next 6 months or bearish, right? Or neutral? And clear as day, like we're, significantly above where you're supposed to be at for historical average for people feeling bearish about the stock market the next 6 months. The latest reading came in at 46.4%. Versus usually 31% of people are bearish on the market the next 6 months. Now, I use this as a contrarian kind of way of knowing if you're buying stocks at good valuations or an attractive time to be a buyer in the market, right? And usually the further and further this gets into bearishness, just another one of those things. Every time I see this go very, very bearish, it always ends up being a great time to be a buyer of stocks. And you look back a few years later, and you're like, oh my gosh, remember when everybody was bearish and like it was a great time to buy? So when you see AI investor sentiment continue to go worse and worse bearish, and you see fear and greed index continue to go further and further bearish, you need to be buying, right? Look at this. I typed in Google Trends. If you guys never look at Google Trends, I think it can be valuable. How to buy stocks, right? I think I put how to buy stocks, which is probably a popular term that usually when people are looking to buy stocks, they're going to be searching something like that, right? And so I did this trend kind of over the past 6 months roughly, and that has definitely dropped off a cliff, right? A lot less people saying how to buy stocks. Why? Well, the stock market's very weak right now. Additionally, right, usually people kind of start looking into stocks when they hear from their friend, their family member, I just made another $10,000 in the market. I just made another $5,000 in the market. Look at this. I just doubled my money on this stock, right? And you hear a lot of those stories, and then other people start looking and like, oh, my buddy, who's not even as smart as me, he just made himself $14,000 in the past month on his stock market portfolio. I should probably look into that, right? And these stories get talked about. You also see it on social media, and more people start looking into like, how do I buy stocks? Like, how do I do this? Like this is interesting, right? I want to start making this money everybody else is making. And that term has obviously fallen off quite significantly. So we're in a time period where just not as many people are kind of looking to buy stocks right now, right? Now, this can also spike up when you're in a crash. So do keep that in mind. So like let's say the stock market, let's say the S&P 500 went down 20% over the next months. Probably not happening, but let's say it happened, right? This term would spike huge. And that doesn't mean it was a bad time to buy in the market. That just means like because the crash was so dramatic and everybody in the media was talking about it, it makes people say, oh, let me look into that, right? Now, look at this. I typed in this term, pretty popular term, stocks to buy over the past 3 months. Look at where we're at right now. That's fallen off a cliff, certainly, from the excitement there was, in the past. And if you look at a 6-month, you see even a more dramatic move. Now, I also typed in this term, stocks to buy, over the past 5 years. And look at this, right? Obviously, you can see clear trend of major downward move there. But gosh, man, this hurts me to see this. Look at how low this term got at the end of 2022. I mean, think about that. People missed 1,000% plus gain in NVIDIA. They missed Meta at $88. They missed Palantir at $6. They missed Shopify at $25 and countless other great stocks and great opportunities. And people just took like a buyer strike, basically from the second half of 2022 into the first half, basically into the beginning of 2024. And what a disappointment, man. Because people just missed incredible opportunities in the stock market. Like just ridiculous steal deals all over the place. And why was this? I'll tell you exactly why this happened. It happened for a few reasons. One, inflation. Inflation sliced and diced the consumer out there, so a lot of people didn't have a lot of extra money at that particular time to invest. So that definitely played a part. It wasn't the biggest part, but it played a part. Two, coming off of the hype and excitement at the end of 2020 and into 2021, and then going through a brutal bear market where the NASDAQ fell 37% peak to trough, that damaged a lot of the psychology of the market, and a lot of people just gave up. They threw in the towel. They said, the hell with this. I'm not doing this anymore. This stock market thing sucks, right? That happens. Don't let that happen to you guys. Oh, gosh. Every time it happens, you get into a correction, you get into a bear market, and people throw in the towel. Say, I'm done with this. I'm out. And they either never come back, so they just miss like incredible life-changing money over the years, or what happens is they leave for a while, and then guess what? They come back when everybody's already made a ton of money again, and you got a raging bull market because they everybody's making so much money now, it's safe to invest again. They end up getting in near all-time highs and end up getting screwed again, right? And so you got to stay in for the long term. Don't throw in the towel in this game. I'll tell you guys about a good friend of mine. I tell this story sometimes. This man, he got screwed in the housing bubble in Vegas. He bought a house at a really bad time, right before the housing crash. And he decided to never return to the real estate market. The man's, just rented all these years because he refused to buy a house again. And gosh, he could have made so much money if he'd been buying homes over these years and even buying real estate investment properties in Vegas. Look at how much things have appreciated over the past 15 years in Las Vegas. It's incredible, right? So with stocks and with real estate, can you buy at a bad time and get screwed? Sure, that can happen. But never, ever leave the market. Stay in for the long term, because if you stay in for the long term, even if you bought at the worst time imaginable, you're still going to be getting some great deals over future months and years to buy at prices that are just silly. You could have bought in the tech bubble when the NASDAQ was 4,000. That was close to peak. About 2 years later, roughly, the NASDAQ was at 1,000. Now, you could have threw in the towel and said, oh my gosh, I'm never returning the stock market. I bought the NASDAQ at 4,000, now it's at 1,000. Imagine if you just stayed buying over those months and over those years. And the NASDAQ is what, 20,000 today? Something like that? Think about all the stocks that are great companies in that. Amazon's probably returned 100,000% plus. You could have just bought Amazon stock. We're not even talking Apple and all the other great ones over the years. Just Amazon, you would have, life-changing money. You have so much money, you don't even know what to do with it. You're trying to figure out, should I buy a new helicopter or should I buy a new yacht? It's just ridiculous. But people throw in the towel when you're in a correction or in a crash. They leave the market. Worst decision. Worst financial decision you can ever make. Put yourself in a position, you got more income than expenses, you can continuously invest in the market. And let the game play out, man. Don't leave the market. Oh, by the way, another reason a lot of people left the market during this time, I'm going to be completely honest with you guys, because I saw the comments. A lot of people didn't want to buy under Biden. They thought, Biden's president. He doesn't know what he's doing. We don't believe in him, so we're not buying stocks, right? You can play these games, man. You can play these games, but you just miss out on so much money, right? I posted this on my X page here today. You can follow me on X. That will be linked in the description area down there if you want to follow me on X. My X has been popping, man, popping. But I posted 16 popular stocks down huge from all-time highs, right? And think about it. These stocks down huge, people were piling into these stocks last year. And why were people piling in? I'll tell you exactly why they were piling in. T-man optimism. Trump optimism. A lot of people very excited. Trump's the president again. Stock market's going to go crazy. Bitcoin's going to go crazy. Everything's going to go crazy. We're going to make so much money, right? And, playing politics, you're going to learn a very painful lesson. You want to play politics in the stock market, you're going to learn a very, very painful lesson. Do not buy stocks because your guy is in office. Do not hold out on not buying stocks because your guy's not in office. It's ridiculous. That has cost people a fortune over time. I don't care who the president is. I don't care if you love him, you hate him, you buy stocks. I got in the market, Obama was president, and I bought stocks. There was a pretty close next election. No, when I bought my first stock, technically George Bush was still president. Okay? Then Obama was president. Then it was a close election between Mitt Romney and Obama, right? Pretty close election, relatively speaking. Guess what? If Romney won, guess what I was going to do? Buy stocks. And if Obama won, guess what I was going to do? Buy stocks. And I did it. And then Trump became president. A lot of people scared. Oh my gosh, Trump's president. I don't know about this, right? Guess what I did? I bought stocks. Then Biden became president. Guess what I did? I bought stocks. Now Trump's president again. Guess what I'm going to do? Buy stocks again. Next election, who's going to be president? J.D. Vance, Gavin Newsom, who knows? Who cares? You buy stocks. Don't play politics unless you want to cost yourself a fortune over time. Don't play stupid games. You want to play stupid games, you win stupid prizes, and the prizes are not good at this casino, okay? Don't do it. Don't do it. Do not let your politics decide whether you invest in the market or not, and whether you feel good to buy stocks or not. Yeah, I'll say it again, and yet people will make these dumb decisions. And please try to talk some sense into people around you. When they're, on this buyer strike, they don't want to buy stocks because this person's president, that person's president, please try to talk some sense into people. And if you can't do it and you can't get through to them and they're too far gone, they're too far gone. It is what it is. But it's just ridiculous, man. Just ridiculous. Now, you want more evidence on why it's a great time to be buying stocks? Well, let me present you some more evidence here. The VIX. The VIX has been elevating significantly. If I recall, I pulled up year to date on the VIX. The VIX is up 68% year to date. Okay, we got an elevating VIX here. You got to be buying stocks over the next 6 to 9 months heavy. Whenever you see the VIX popping and remaining elevated, it's always a great time to be a buyer of stocks. The higher the VIX goes, understand, the more of a great buying opportunity you're usually getting in the market. So if now we go from where the VIX is at 25, let's say we keep moving up here. Next thing you know, the VIX is 35, 45. Just understand, you're getting great deals on stocks. And I've never seen it in my life, which, my life's really long. I studied before I was in the stock market, but I've been in the stock market, 17, 18 years now. I've never seen it where the VIX was popping massively and kept elevating, and it wasn't a great buying opportunity. It always is. So just understand that, ladies and gentlemen, okay? Put to call ratio here. Look at the put to call ratio, 0.91. So keep in mind there should always be a lot more people buying call options versus put options, because guess where the market usually goes over time? Up, up, up. Most years the stock market goes up. Most months the stock market goes up, right? But we're at a moment here where people are loading up on put options, right? They're loading up on put options. The closer it gets to 1, the more you need to buy heavy. And if you see it go over 1, especially for any significant amount of time, you got to be loading the boat on stocks. Usually people are late to play this game. They start buying puts at a bad time when they should have been buying puts. If you wanted to buy protection on your portfolio and buy put options because you thought the market might go down, you should have been doing that a month ago, 2 months ago. Not now. People are usually late to the game. They'll keep loading puts. And next thing you know, market flips the other way, and next thing you know, their put options are expiring, worthless all over the place, right? You want more evidence? I can't mention the word, okay, because I mentioned the word in a video the other day, and then next thing you know, I got age restricted on the video. So we're going to call it Rod Wave, okay? There's uncertainty regarding Rod Wave right now. We don't know what's going to happen in that situation. We don't know if that's going to go another few weeks, another few months. Experts are talking about this is going to be a much longer situation than what was talked about here. But here's the thing, okay, in regards to this rod wave situation. Do not automatically assume this is going to go on forever. So even though the experts are now talking about this is going to be months long process or this could take years, which maybe it is, don't automatically assume that's the case. Remember what happened Liberation Day last year with the whole tariff drama, right? Like, then people thought it was going to be devastating, and next thing you know, we saw this happen, and all of a sudden it was like, oh, this isn't as big a deal, and this is getting removed, and this is getting removed, and okay, this caveat here. And so just understand, like, now people are talking about this is going to be a long run thing. Who knows? Maybe it does wrap up in the next few weeks. I don't know. The moral of the story is there's a lot of uncertainty around rod wave right now. And when there's uncertainty around a situation like this, a geopolitical situation, usually you have to be buying stocks during that particular time. We have more uncertainty around Jerome Powell. Jerome Powell's talking about he's going to stay on as at the Fed until, the whole investigation's over and stuff like that. So now people are up in the air and they don't know what is going to happen here regarding Jerome Powell. Does this mean the Fed is going to remain more hawkish than people had previously thought? That's a real talk right now, right? And so this is a debate. Now people are wondering how many times the Fed actually going to cut. Are they going to cut, right? All these sorts of thought processes here. And I understand people have an opinion on Jerome Powell, right? A lot of the people's opinion is just because T-Man says he's bad guy, so a lot of people don't even think, and they're just like, oh, T-Man says he's bad guy, right? It's just crazy. Like, I can't believe people can be brainwashed by politicians the way they are, but anyways, that's a subject for another day, right? Like, it's wild. I hate politics. Did I ever tell you that? If you've been watching my channel, you know that, right? Hate it. So, Jerome Powell, I don't like him either. I think he made massive mistakes. He pumped way too much money into the economy when he should have been laying off. He let inflation run wild at a ridiculous rate, right? I think he's keeping rates too high for too long. The fact that, he's keeping rates up here right now with CPI where it is, listen, what's the Fed going to do? Like, okay, so you keep rates up high and have the consumer get sliced and diced by oil price being high? If the Fed lower rates right now, that's not going to, or up rates, that's not going to change oil price massively. Oil prices, because of what's going on with the rod wave situation, that has nothing to do with like, oh, the Fed got to lower, right? So they're just killing the economy multiple ways. It's like, okay, oil's super high, so that's going to feed into a bunch of stuff. But then also we're going to keep rates high, so then you guys can't take out loans for anything, you can't buy anything. So let's kill the economy while also having you pay how about if you lose your job and then you have to pay super high prices at the gas pump too? Like, this is crazy, right? But the moral of the story is I do not think Jerome Powell makes decisions based upon, I think he and the Fed in general make the decisions they think is best regardless of political pressure and all those sorts of things, right? That doesn't mean they make the right decisions, but I don't think they're going to be like jaded and like, oh, we're going to do this because of blah, blah. I just don't see that, right? But the moral of the story is it's more uncertainty that's out there, right? Now, what am I personally doing? I'm making a pretty big move here. Pretty dang big. Listen, public account, for instance. If we go back to the end of 2025, I was putting in basically $500 a week to that portfolio. Well, just recently here, as in last week was kind of the first week I started it, but I'm bumping the public account buys to $3,000 a week. $3,000 a week. Now remember, I have significant cash load because, I just looked at stocks last year and, I did some buying here and there of opportunistic stocks, but it wasn't like we got, we're getting great pricing on stocks. Now we're in a situation we're starting to get very attractive pricing on stocks and a lot of stocks too. Like there's at least, I would say 10 or 15 stocks I want to buy right now. If we go back, into Q3, Q4 last year, I don't think there was. There was a few, but and honestly, there's 10 to 15 stocks that I want to buy bad right now, but there's a lot more stocks than that are great buys right now, right? Now, additionally, on top of this, I'm upping my private portfolio buys as well. So that shows how much conviction I have in kind of, wanting to take advantage of deals out there in the market over the next, we can call it 6 to 9 months. And as long as this market remains very uncertain, downtrends or stays stagnant in a kangaroo mode, right, I'm going to be buying heavy. So that's across all my different portfolios. The only one I'm not upping for the most part is just the, the Patreon portfolio, because that one I'm supposed to just do $250 a week, so I'm going to keep that one the same. But yeah, up in the public account buys big time, and up in my private portfolios buys big time as well. So, and if we can get that VIX to really pop huge to a 40, 50 level, then I'll come in with some strategic, like, big boy buys too, where I'll put in $30,000 in a day, $50,000 in a day, or something like that, right? Ladies and gentlemen, before we get rolling here on the rest of the video, my private group, that will be the pinned comment down there if you want access to all my course curriculums, access to my private Discord chat, exclusive weekly videos, access to 1000xstocks.com, all that good stuff. You know, this is a time period when the market gets shaky like this, demand definitely goes much lower for the private group, right? Much lower than last year. Last year, demand for the private group was ridiculous. This year, it's a lot lower. And it's always fascinating to me because I'm like, now we're getting all these great deals. This is when you got to be taking investing serious. Like, this is when you should be in the course curriculums and doing all this stuff. But, you know, people decide they want to, you know, join something like that when, you know, market's at all-time highs. And then, you know, when you're getting all this great pricing on stocks, you know, people are like, I'm not as enthusiastic about joining. It's always wild to me, man. Because I'm like, now's the time. You need to be in the course curriculums. You need to be taking this stuff serious. Like, whenever you're getting corrections, crashes in the market, that's when you got to get involved in a serious way, right? But anyways, just wait. You know, next thing you know, market turns, AMD goes on a big run, blah, blah, blah. Also, demand's going to go crazy for the private group again. I'll be like, oh, yeah, I remember, you know, when, you know, demand was really low because stocks were down. Like, it's just always fascinating to me, right? Now, I came out with a video yesterday on the reaction channel. I'm not sure if you guys watch this channel or not. It's called Jeremy LaFave Makes Money. 58,000 people gotten to see this video so far since it came out. My stock is under attack. So we spoke about different subjects in that video, but the top comment on the video was this one. It said, Walmart, people will pay a 42 forward P because I offer great visibility on my 6% revenue growth. NVIDIA, people will not pay a 22 forward P even though I offer great visibility on my 70% plus revenue growth, right? And I think this is a frustrating thing for people in the market. Very frustrating thing. And I get it, right? Let me say a few things about this. First off, Walmart, I think it is trading way too expensive right now, right? Way too expensive. But it's hard to say what a stock should. Look at Tesla, for instance, right? Tesla numbers factually have been awful the last several years. Trash. That's not a debate. That's just a fact. It's been awful at Tesla for the last several years, right? And yet the stock trades at like, you know, just ridiculous P ratio. Does it deserve to be that? Not in my opinion, but the market chooses to do silly things sometimes. So Walmart trading at a 42, you know, P or forward P, I think it's silly, but the market's going to do what it wants to do, right? But the big thing you got to understand is NVIDIA, people are viewing this year, next year as good as it gets for NVIDIA, right? That's not the view of Walmart. No one's scared that, you know, 2 or 3 years from now, Walmart's margins are going to crash and their revenue is going to crash. People are legitimately scared of that for NVIDIA. And I get it. You should be at least somewhat worried about that. Doesn't mean it's going to for sure happen, but you should be, it's a possibility. Does Amazon, Meta, Google, do they want to continue to spend every dollar of free cash flow they possibly have on NVIDIA chips 3 years from now, 4 years from now, 5 years from now? I don't know about that. Maybe. But I think there's a strong debate that they're not. And they're going to spend heavy this year, and then they're going to moderate that CapEx spend majorly next year. And then they're going to look at their businesses, and if the numbers aren't massively helping them grow revenues, they're going to cut. And that's going to hit one company harder than any other company in the world, and it's NVIDIA. And so understand that's why people are not, the numbers are great. The guidance is great. Jensen's doing everything in his power to get people to buy that stock, and they're just still refusing because there's belief. And I don't think it's false belief. I think it's realistic belief that what's going on this year and next year is as good as it gets for NVIDIA, right? Now, that's why I made the prediction last year in regards to NVIDIA. I said this stock's going to stay stuck between about 125 and the 200-ish range. When people are feeling very bullish, they're going to bid NVIDIA up in a major way. It's going to go to 200-ish range, right? When they're feeling real bearish, it'll go down to about 125, but it's just kind of going to gyrate there. And that's just going to be what it's going to be for a while, right? Until you can get clarity about, multi-year out numbers. And you just don't have that right now. Now, additionally, you took the excitement out of the stock as well when Jensen's given the guidance. There's not much room for like some shock and awe numbers at this point in time. Now, additionally, NVIDIA's had the whole game on lock the last several years. That's not realistic anymore. AMD is about to start growing. Like, they're not going to magically just get these growth rates from anywhere. They're going to be eating market share here, right? NVIDIA's revenue next quarter is supposed to go up 32%, 36% the quarter after, 27%, 40%, 43%, 46%, 45%. Keep in mind, I think a lot of these numbers are low. I think analysts are way low on a lot of their numbers. But the moral of the story is here, AMD is not just going to accidentally get all that revenue growth, right? They're not just going to accidentally start doing $15 to $20 billion a quarter in revenue, right? And then 25 billion and 30 billion. That's not just that money's going to, there's going to come market share out of NVIDIA. And so that's what's going on with NVIDIA here. And it just is what it is. Doesn't mean NVIDIA is a bad company. It's a great company. They're going to continue to put up great numbers. But if you're wondering, like, why are they not going out there and stampede and buy NVIDIA stock? This is why. And when you got somebody that's a serious competitor like AMD, and these big tech companies are going to spend fortunes with AMD over the next several years, what do you do if you're NVIDIA? Do you let AMD just take your market share, or do you lower price? Let's say they lower price, right? Well, your margins are going to get killed. Here's why. AMD usually pretty significantly undercuts NVIDIA price. So NVIDIA would have to come way down on price. It's not a good time to come way down on price. Do you know why? Memory. Memory prices have exploded, which is going to be the next subject we're about to get into in regards to Micron. So if your memory cost is going insane, right, while you have AMD pressure and you're like, should I lower price to compete with AMD? And you also have the pressure from Broadcom with the custom chips. You're stuck in a weird position if you're NVIDIA. You're like, we feel like we have the best of the best chips, but do we? Like what if somebody has just something a little less? But guess what? It way undercuts on price. So that sometimes you don't always need the best of the best chips in every situation. There's many situations where you need a great chip, but it doesn't have to be the Bugatti. It doesn't have to be the Formula One car. There's certain situations you want the Formula One car, but that's not always the case. If that was the case, then AMD wouldn't have a business. If that was the case, Broadcom wouldn't have a business, right? But there's many use cases. The more you go down the rabbit hole on, that you don't need. Like, it's a complete waste of capital to have a F1 car if you don't need it to do F1 things, right? If I need to go to the grocery store, like, the minivan will do fine, right? The SUV will do fine. You don't need the F1 car to go down there. It doesn't make sense. Understand? So that's what's going on with NVIDIA. And I understand for newer investors to the market, it's very frustrating because you're looking and you're like, why? The numbers are so amazing. They're going to continue to be amazing for at least this year and next year. You got to understand the way deeper things going on here, right? And Wall Street gets it. They understand this. And that's why you're continuing to see that stock with, just not momentum right now. But there will be another bullish cycle in NVIDIA. And you'll see the stock move up to 200-ish range. But if you're expecting that stock to go 400, 500, 600, AMD is going to go 400 to 600, but not NVIDIA, okay? Next one up here, at least not anytime soon. Next subject up here, Micron. Down on these unreal earnings. Micron, listen, look at this. A++ grade income statement here. Revenue went from $8 billion to $23 billion. Gross margin went to $17.7 billion from $2.9 billion. Operating income went to $16 billion from $1.7 billion. Net income, almost $14 billion from $1.5 billion. Diluted EPS, $12.07 versus $1.41 the same quarter last year. That's an A++ quarter for Micron. Shockingly great. The guidance was amazing for Micron. One of the biggest memory chip companies in the world. Incredible, right? The numbers are putting up. Now, you look at the stock, it's a tricky one. You're like, what? Look at these growth rates. Look at these numbers. This is insane. And then you look at the 2-year forward P and it's, single digits. And you're like, huh? Forward P, based upon the guidance, they're probably at a forward P right now of like 8 or 7. Not 11 because the guidance was so insane. But this is actually a red flag. I know it's confusing for investors. They're like, wait, I thought a low forward P is good. Sometimes it's good. Sometimes in a cyclical industry like a Micron, it sounds crazy, but it's the truth. And you can go back throughout time. When Micron trades at very rich, very high forward PE, almost always it's a great time to buy the stock. When Micron trades at insanely low forward PE, it's usually not a good time to buy the stock. It's like counterintuitive. It's like, how? What? But that's the way this company is. Because basically what happens is commoditized industry. And I know people want to try to pitch it as not commoditized anymore. It's a commoditized industry, okay? Several companies you can get the same exact thing from. What happens here is they increase capacity during a time period. Micron themselves are increasing capacity. They're not going to be the only ones because there's so much money to be made here, right? Over the next year or two. So you increase capacity. Then what happens is whatever that memory is going to all of a sudden has a big slowdown cycle, which will likely end up happening, right? And that will happen. That's not like a question because Amazon's not going to magically go to $400 billion of CapEx in the next 2 years. Like they can't do it. They're already maxed out. So if they're going to increase, it's very small increases from here. So all of a sudden demand starts going like, oh, demand was insane. Now it's like coming down and being more modest. And that's when you get pricing collapse for memory prices. Think about it. If NVIDIA now is going to have to compete with an AMD in a major way, and they have to figure out, do they want a lower price, and they start getting complaints from their customer base is like, hey, we might not order as much because you know what, some of our products aren't taking off as fast as we thought they were going to take off, so we probably don't need as much in general, and your pricing's kind of crazy, and all of a sudden NVIDIA is like, oh shoot, what are we going to do here? Maybe lower price? You think they're going to want to keep paying Micron these prices? No, of course not. They're gonna put pressure on Micron. That's always what the big OEMs do. Apple would do the same thing in the smartphone industry. I used to own a lot of semiconductor companies that did a lot of business with Apple, Cirrus Logic, Skyworks Solutions, companies like that, right? And even Qualcomm back in the day, maybe even a few others, right? And Apple would have certain time periods when their margins would start getting squeezed due to competition from Android. And so Apple would then squeeze their semiconductor companies that go into the iPhone. So all of a sudden, Cirrus Logic would get a squeeze. Skyworks would get a squeeze, and other companies as well. It was not a fun time. Same exact thing happens in the memory chip space. If all of a sudden times get a little harder, like right now, the memory chip companies, right now meaning this year, next year, they can charge whatever they want because NVIDIA's having a great time. AMD's growth rates are, obviously going to be blowing up over the next couple of years. So they can get away with it. As soon as you start to see a moderation of CapEx, you can't get away with it anymore. And that's when you get the squeeze. And all of a sudden, SK Hynix, Samsung, Micron, and other memory chip companies, there's a few others out there. All of a sudden, you start feeling the squeeze and pricing lowers, margins lower. And then next thing you know, your revenue starts going down. People are like, what? Revenue was going up like 1 billion%, and now it's going down? What's going on here, right? Micron, I mean, this is silly, because you got a company trading at over $500 billion market cap. Over $500 billion for a memory chip company? Now, Micron deserves to be trading at $100 billion, $200 billion, maybe even $300 billion. But I mean, come on, guys, what are we going to push this to? $1 trillion market cap for a memory chip company? Like this starts to get silly, right? Like this is unsustainable. And that's why you see the stock down after hours, because more and more investors are realizing this is not sustainable long term, right? To put this in reference, AMD is like a night and day, is disrespectful to even like try to say Micron's a more innovative or important company than AMD. It's not like, no. Anybody that knows anything about this industry knows like AMD is one of the most important companies in the world. And they will get the value for that over time. AMD trades at a $325 billion market cap. Micron's at a $519 billion market cap. It's not sustainable, right? I'll tell you a story about when I worked at Quick Trip back in the day. When I worked at Quick Trip, there was a story I got told of, and this was kind of around the time gas prices were going crazy in the great financial crisis, and it was massive move down in oil. But anyways, some of the trucks, some of the ones that worked at the truck stock, some of the store managers, they were making more money than their boss's boss. In between that, there was a training manager, and then the next position up was a supervisor. And because of the way the bonus structure was at that particular time, there were store managers making more money than their boss's boss. Does that seem sustainable? No, it's silly, right? And adjustments were made, obviously, right? And so when you got a company like Micron trading at this sort of valuation, like, just understand this is not sustainable long term. And you could make an argument that this time's different. No, this time's different. That's what they've been saying for the longest time in the memory chip industry. This is not the first big boom cycle. This is just one of a number of boom cycles. And then the bust hurts bad. And so that's why that stock's down after hours. The numbers were an A++. The guidance was insane. I'm sure the conference call's amazing. Everybody knows that. Why do you think the stock went from $80 to $450? Didn't just go there by magic. It did it because people knew the numbers were going to go insane, right? Alrighty, guys, I appreciate you joining me as always. Thank you so much for being here. Hope you learned a lot today. Hope you really enjoyed this video. Appreciate you for joining me. If you're looking to join my private stock group, you're not going to join my private stock group right now. Stocks are down. Let's be honest about that. But if you were brave enough, that's the pinned comment down there. Much love and have a great day.